Which, by the way, guys, if you're anything like me and Trish, your retirement's not making you 10% a month. No. It's not making you that much at all. So Trish took money basically that wasn't working for her. She made it work for her to the sum of $2,000 a month.
Right.
And she took the math forward and said, well, I'm going to have another $100,000 in this amount of time. And then in this time, I'm going to have another $100,000.
Right.
And
we're not paying a mortgage payment.
Right. You're just going to compound that.
Right.
And you're going to have a much bigger retirement.
Right.
And you have the flexibility to not have to worry about that $2,000 mortgage payment.
Paying that mortgage. I do not want to pay it.
So how many times, I'm curious, during the mortgage process or otherwise, did people tell you you're crazy or it's too good to be true or this can't be real?
Well, I had a couple people say, people that I knew that I was talking to, they were like, oh, I know somebody that lost their house. And I go, okay. So then I gave Frank all the list of questions like, did I hear this correctly or not? Did I make a mistake? And the problem is that the people that did lose their house was prior to 2014.
You nailed it.
Okay. And they didn't make the tax payment.
That's right.
So we only have to pay our taxes, which we have to pay anyway.
Right.
We have to pay our HOA, which we have to pay anyway. And we have to pay our homeowner's insurance, which you all have to pay anyway. Exactly. And that's all I'm worried about.
That's it.
The rest of it is,
Yeah. Now, a lot of people, told you that it was too good to be true because prior to 2014, what they would do, they didn't pay their taxes. That's the only way to lose your house, by the way, on a reverse mortgage. Don't pay your taxes. And that's not the mortgage company taking your house. That's the tax collector taking your house. That's Uncle Sam. But what happened prior to 2014 is they would allow husband and wife to do a reverse mortgage, but they could leave one of them off. So let's say you had left you off of the mortgage and you did it way back in 2014 and something tragic happened to your husband and you weren't on the reverse mortgage and the house also had no equity, which can't happen these days either way. It's very, very rare that would happen. Then the people would have no equity.
Right.
And then there was possibility they could lose the house or they didn't pay their taxes. That's it. So like Trish said, we're all responsible for tax, insurance, and HOA fee. That's it. Now, Trish, did you know you can actually make a payment on a reverse mortgage?
Yes, but I'm not going to.
Why
would I pay the bank to do this? And here's the other thing. We are not looking at this is our age-in-place house.
Right.
Okay, this is why we did this. But the other thing is we're not necessarily worried about leaving it to anybody.
Oh.
Okay, it is what it is. I mean, families today don't do legacies like they did 40 years ago.
Right.
It's a whole different world.